Good afternoon, and welcome to another Winning Wednesdays. Before I start, just give me a few minutes, a minute or two, and let others join in, as well as let me just check to make sure we have everything set correctly before we begin. But come on in and just give me a few minutes. I should be able to start the session in a few minutes. Okay. We should be starting in a few minutes. Just give me a few more seconds. We should be ready to go. Okay. Welcome to another wonderful Winning Wednesday. It's always a pleasure to be here on my Wednesday afternoons to come in and share, come in and have a guest talk to us about their business experiences, or just to spend time, a few minutes with our people and share a thing or two. One of the reasons why we still have this platform, or why we formed this platform, was because as business owners, sometimes you don't have people who are also entrepreneurs in your circle. And you may want a safe space where you can have conversations, you can talk about your business or operations, management issues, and things of that sort. And this is why this platform is here, just so that we can all share in and learn from each other. Entrepreneurship is the backbone of our communities. And for us to be able to give back to our communities, we also need the ability, or we need to be able to share with others who are in the communities as well, to learn from them. The mistakes that I've made should not be the same mistakes that you make. When we have conversations, we're able to help each other out to navigate the world of entrepreneurship. All right. And Lee should be joining us in a few minutes. And before he comes in, I don't want to keep you waiting. So I'm going to get on and start on what we are looking to have a conversation on this week. One of the things that I read this week, let me just read it out for you all. But I like reading articles that talk about one, where the markets are at from a real estate perspective. As a real estate agent, as well as a real estate investor, it's very important for me to know what's happening in the market and to see what other markets are experiencing, because we don't only invest in Virginia, we invest in other locations. So I was reading this, and this caught my eye because I was reading this and they were talking about the percentage um, of the percentage prices of starter homes in comparison to 2017 and 2024. And why this is important is because most first time home buyers typically buy what we call starter homes. Most of them are homes that are, and more affordable for most people who are starting. And from what I was reading in 2017, and this is national data, so a lot of times you have to drill down to be able to go to your specific location to be able to get the correct numbers. However, from a national perspective, in 2017, a starter home was 157,000. And as of 2024, a starter home is 293,000. That is an increase of 87% over the past 7 years. 87% over the past 7 years. Now, there's so much that we can say about this, but what I wanted to one of the things that I wanted to share with you about this is I hear a lot of times people saying, wait until things are ideal. Of course, that's also loaded. There will always be different things for different people. However, when you look at the increase, that 87% increase, and we compare to the interest rate that one would have paid, the question remains, are you saving more by holding on and saying you're waiting for the interest rates to get lower, or are you losing out more by not entering the market and being in a position where your property is able to appreciate and you're able to realize the appreciation of that home, right? A lot of times we have conversations with, especially first time home buyers, who are concerned, hey, what if I buy now at an interest rate of 7%? What's going to happen? It's unrealistic, it's unreliable. But when you look at the flip side and say, let's look at the value of homes to see how it's been changing over the years, to see whether it really makes financial sense for you to be holding out or for you to be getting into the market. And I found this a little bit interesting because most of the time decisions have to be made based off of data. And when you have data like this that's showing you clearly that over the past 7 years, starter home prices have risen by 87%. It's the data. It's not me. It's not me trying to persuade you to do A or B. I'm just sharing statistics, and you can sit down and drill even further to kind of understand more, and then use that to make your decisions. But I know around here in Northern Virginia, the numbers are very different. However, it's still the same idea that property values have gone significantly high. They've gone up, and waiting just means that you are waiting. We just don't know when rates are going to go down to allow you to buy. And then we don't know, once we've been waiting, we don't know what the value of homes or even starter homes will be at that point in time. So it's always just something to start off with. Some people may say, well, we're waiting for the interest rates to fall. And one of the things that I also mention when I have these conversations is that, yes, interest rates are now the high sixes or so. However, with that, it all boils down to affordability as well. As we see home prices go up, it just also means that a lot of people now are being left out and are not in a position where they're able to get in and purchase homes. Because if, for example, 2 years back you were able to afford a three-bedroom house for 450,000, if that house now is valued at 430,000 and you can now qualify for a 410, you've lost in that regard, and chances are at that lower price you may now be in a position where you can maybe go for a two-bedroom condo versus going for a three-bedroom townhome. So it's things like that that you consider when you are making these decisions of, do I buy or do I not buy? So just something that I wanted to share. And it's good to read, it's good to get perspective from different articles and from different sources to try and get an understanding of where things are. And also, talking about mortgage rates, one of the other things that I was reading about was how Fannie Mae has revised the 2025 mortgage rates forecast, and they are signaling a slower decline. They're signaling a slower decline than expected. And what that means for a lot of you who are in multifamily or who are investing in real estate is that I know a couple of years back, a lot of people were waiting or holding on to properties in the hope that interest rates will go down further and they may be in a position where they're able to either refinance or they're able to sell, whatever the case might be. And just reading this, that Fannie Mae has revised its mortgage rate forecast, um, says a lot. And as business operators, then it's an opportunity for you to then make decisions based off of your forecast to say, what do we do? Do we hold on? Do we let go? Do we sell? What exactly do we do? I see Lee has joined in. Hey Lee, are you in, or it's just me here?
I'm here. If you can hear me.
All right, I can hear you. I can hear you. Good to have you back. I started off the show and I was just sharing about an article that I read that was talking about how for starter homes, well, really it's for real estate, but for starter homes, if we were to do a comparison between 2017 and 2024, starter home prices have gone up by 87%. That's just nationwide. And
Help me to understand what is the definition of a starter home.
a starter home typically are just homes that are on the lower end of pricing that are usually for most first time home buyers. So you may find that they're slightly smaller than most of the homes in the communities, or when most of the homes in the communities have two-car garages, these ones may have maybe one or just have street parking. So they are what most first time home buyers would go for when they are looking to purchase homes. So when you look at the statistics here, it says in 2017, starter homes were about 157,000. And as of 2024, their value had gone up to about 293,000, which is an 87% increase over the past 7 years.
Hmm.
So it's good to look at data like that and use data to determine or to help you make decisions, which is why I had also talked about the focus that was coming in from Fannie Mae that was along the lines of mortgage rates, or to say those are going to be slowly declining versus the projections that they had given about, was it last year or but prior to this new focus that's coming out. So it's one of those things that I believe as business owners, as investors, as just anybody who transacts or uses um, real estate in the wealth building, that these are things that you have to be aware of, because it's going to help you also work around your own plans and your own forecasting to see if you have properties, which ones need you to refinance or which ones you need to hold off. Decisions have to be made out of concrete data versus just our emotions and how we feel at that point in time, right?
No, as you were stating that, I did a quick search on what is a starter home, and the definition that came back is a starter home is typically the first property purchased by a novice home buyer, often smaller and less expensive than other homes in the area. It is
Mm-hmm.
designed to be affordable and manageable, allowing individuals or families to enter the housing market and potentially build equity for future home purchases. And this
Yeah.
kind of sort of aligns to what we were talking about the other day when we had the Cash Flow Breakfast Club, and we talked about return on equity, right?
Mm-hmm. Mm-hmm.
And return on equity is your cash flow that is divided by the equity that you have, right? And when you think about return on equity, it's a trending line downward because as you are growing in your equity, in most instances, the amount that you are charging from a cash flow perspective, right, is staying flat. So
Mm-hmm.
when you divide that cash flow by the equity, it's going to be a curve that's going, down and towards the right, left going high, going down, right? Because the equity is going to continue to go up, probably at or with inflation, but because the cash flow is staying flat, because the expenses for managing that property are also going to be rising, even if you are able to increase the rent. So, one of the things that I got from that exercise is when is it time to sell that starter home and take advantage of that equity just a little bit more,
Mm-hmm. Mm-hmm.
right?
Yeah.
Because eventually that line will go. I don't think it's ever going to go down to zero, but it's going to get precipitously closer and closer and closer and closer to zero.
Yeah.
So,
True.
like, if there's a certain point, and I think the point that has to be understood here is if you fall out of the 1% rule for a single family and the 1.25% rule for a multi-dwelling, whether that's up to from a duplex all the way up to a quadplex, when is it that that property could be that equity can be tapped into so that it can be levered in order to grow exponentially?
Mm.
It was a great conversation, and I will admit, having had 20 plus years in real estate investing, I yes had a very distinct understanding of uh, return on investment. Everybody knows return on investment, even if they don't know what return on investment is. We like to look at cash on cash return. We like to look at ARR and IRR. The one that I am now adding to the portfolio is return on equity.
Yeah.
So if you have a property and it can't sustain the 1 to 1.25 rule, could that equity be leveraged in a different area than where it is? It's
Yeah.
food for thought and interesting because one of the reasons why we put all of this together was we were having a conversation around what is it that a small business owner can do in order to get access to capital so that they could either start, fund, and grow that business,
Mm-hmm. Yeah.
right? And we always need to circle back to the fact that that small business owner can leverage one is their corporate or business credit profile. Something that I learned last week was that there is this term that I wasn't 100% aware of it, but as I am always going about and educating myself, there is something called the small business scoring service.
Mm-hmm.
Small business scoring service, and the small business scoring service is what is used by the Small Business Administration to determine your credit worthiness, right?
Okay.
And it's a combination of both what is there on your corporate credit profile, but it is also there in looking at your personal credit profile as well. So my
Mm.
lesson, and I'm just sharing this with our audience, so they might be able to go out and explore, well, what is this SBSS, Small Business Scoring Service, and how it is used when a business owner is looking for lines of credit and working capital in order to start and or grow their business, because that's the whole reason why we put this platform together, was so that we could have conversations with business owners
Yeah.
around what they're doing. This is the place to come and be a little bit vulnerable, because one of the things that I have found on my journey is that when you are the CEO, there used to be this thing that you would see in the movies where it says the buck stops with you. So that place of solopreneur, right? That position of CEO can be a very lonely place.
Yep.
It can be a very lonely place if you don't have, let's call it, a board of directors who can actually be people who you sound information off and against. So, if you need help with your business credit profile, just scan that QR code in the upper right hand corner or left hand corner as I see it, right? And if you also, one of the things that Eunice is an expert at is cash value life insurance policies, right? So if you're trying to figure this all out, we don't have all of the answers. We just do have a couple of answers, and our passion is sharing our answers with the community. And for the most part, I would love to be challenged on some of this stuff because,
Yep.
hey, I'm learning
When?
as well. Hey, Eunice, I don't know if you noticed this, but our good friend, Mr. Keith Nat, is here, and he put in here your net worth, your net worth. I think that might have been a small spelling over there, but my good friend Keith has, helped us tremendously with his
Yeah.
platform called Profit Lifter. And, all of our websites for all of our different businesses are now today running on the platform, the Profit Lifter platform. If you want to, give us a shout out, we actually have an affiliation with Profit Lifter team. I love Keith, I love Brett. those guys over the last 6 months have become my brothers. And basically, I put my entire business onto their platform because they are continuing to add a lot of value. So I would agree with you, my brother Keith, that your network is your net worth, right? And the book by Porter Gal is one that I refer to a lot of people who are within my coaching circle.
Mm-hmm.
Yeah,
No.
and he says, "We love you guys too." Much appreciated, Keith. Eunice and I have had a long week because we have been hanging out with our children. It's spring break, so we just got home from a 4-hour trip, and I asked Eunice, I said, "Are we going live today?" She says, "Absolutely, we're going live today." So we just wanted to share a little bit about what we've been going through, and you definitely want to. Yesterday, Keith had given a wonderful explanation about some of the things that we are going to be doing and offering from a business loan perspective as well,
Yeah, that's
right?
exciting, right?
It's so exciting because, I have many friends who are bankers, right? And I was actually having a conversation with one last week, and I said to her, "Help me to understand, well, how is it that your commercial bank or community bank actually makes the determination for who gets funded and who doesn't,
Mm-hmm.
right?" And I think maybe I didn't hear the answer that I was looking for, so I'm going to revisit the conversation. But on this journey, we have learned a whole lot about what is credit from a business perspective, how to tie it to your EIN number and not have it be tied to your SSN.
Mm-hmm.
And the more and more that I continue on this journey, I believe that this is the perfect thing for small business owners, especially with what's going on in the world right now, right? A lot of people are being retrenched. Maybe there is an opportunity for them to uh, find their passion, to live out what that passion is. They had already tried to go this route where, they were trading time for dollars.
Mm-hmm.
Sometimes that doesn't just fill you up with what it is that you need, but there are things that can be explored. We also have
And
Matrix who came in, Matrix FE, that says, "Hi guys, hi to you, Matrix FXKE. We appreciate you joining us this afternoon, and it's always going to be a wonderful winning Wednesday. However, I think that we should close off today's session just because I'm a little bit tired. I drove 4 hours today,
yeah,
right? And I still haven't had a good cup of coffee. And I'm gonna go and have a good cup of coffee before I finish out my day with some work. So I'll let you close out today, Eunice.
yeah. I think as you was talking, one of the things that came to my mind is that as business owners, a lot of times I find that we don't want to talk about our finances. We all want our businesses, or we have it in our mind that my business is okay. What's happening behind is just for me, and I cannot share that, right? And one of the things that we've been proactive about in our community is just talking to people about ensuring that they build businesses that are financially sound, that can be at a later stage, can even be bought because it's a sound financial business, right? And for you to be able to do things like that, you have to come to a point where you are comfortable discussing your finances and utilizing all or many of the options that are available out there for you to help you grow your business and to start recognizing a lot of cash flow and being in a position where you are able to build up. and make sure your business is financially sound. And one of the ways that we do that is building your business credit and allowing yourself or putting your business in a better position where it can function and it will function outside of your personal life. But I think from a business community, let's continue talking about the things that help our businesses grow, whether it's just operational stuff, whether it's financing, whatever it is. Let's form a community where we are comfortable and able to have these conversations to allow us to grow our businesses. And with all that, thank you guys for being here. We will see you again next week, more refreshed and ready to have another conversation. But thank you for being here. And for those of you who are business owners and are interested in coming on this platform to share a little bit about your own businesses and your journeys, if you scan that code on the top left hand side, you should be directed to a page that will allow you to put in your details, and you could be the next guest with us another time. Other than that, thank you and see you all next week.
Have a wonderful winning Wednesday. And hopefully I'll talk to Keith and hopefully he raise his hand and come and tell us about his small business journey just the same. Keith
That's right.
would love to have you on as a guest. All right,
All
let's
right.
close it out. Have a good week. We'll see you all next week.